All right. Hi everyone. Welcome to PKFX YouTube channel. So this channel is going to be all about forex trading, probably a little bit about crypto trading as well, but trading in general. So you would have noticed by now that this channel has 0 subscribers. It's because I'm starting off this channel, and I'm hoping to grow this channel in a very raw and organic way. So if you're someone who is interested with trading, or if you're someone who has been trading for quite some time, then I believe this channel is going to be in your interest. So if you find the way that I'm explaining certain things and the knowledge that I'm sharing over here is something that is benefiting you, then do subscribe, do like and share these videos to your other trader friends as well. And hopefully over the number of months and years, we can grow into a very strong channel out there when it comes to trading, right? Okay, so this is going to be the very first video that I'm uploading. So my apologies, first of all, if you feel that this video is very raw and very unedited. It's because all I have right now with me, to be very honest, is a laptop and probably like a $10 mic. And I'm just going out there and just starting it off with whatever that I have right now. Hopefully, over the number of videos, upcoming videos in the future, and as I get monetized over the YouTube, and there is some good amount of income coming out from this YouTube channel, I can upgrade whatever that I have into a proper monitor screens, proper mic setups, a proper way of presenting stuff. Maybe I'll consider investing more on streaming videos and so on and so forth. But for now, we gotta work with what we have, right? So I'm pretty much working with what I have. But regardless, I believe that it is important for me to give the best that I can from day one itself. So to start off with, in this very first channel, let's start right. So when I say let's start right, what do I mean by that? Okay, so throughout this trading journey, probably some of you guys are watching out there have never made money. Probably some of you guys have made money but also have lost quite a bit of money, and net you're probably in break even or probably in losses, and you're trying to figure out a profitable edge that is going to eventually make you profitable, right? So what I've observed over this number of years with a lot of profitable traders out there is all of them have one thing in common. That is, they're all journaling their trades. So that's what we're going to do over here today on day one in PKFX YouTube channel. We're going to learn how to build a trading journal, right? Not a very fancy one, just an ideal one, an optimized version, sufficient enough to give us the data that we need in order to come up with a trading edge that eventually going to make us profitable. All right, so let me just share what I have over here. Okay, so if you can see, this is a very simple Excel that I've built for this particular channel, okay, in order to track my trades. Now I'm going to walk you through this journal in why do I have this particular line items, this columns and so on and so forth. But before I do that, right, if any of you guys who are watching who are thinking that, like, nah, I'm not going to track, I'm not going to journal my trades, why do I need to do that? The people who are thinking like this, or the people who think that, nah, this is not going to make any difference, or this is too much of work. Let me just ask you one question, right? So I'm pretty sure all of you guys are probably also working a 9 to 5, probably in the corporate world. All of you guys are probably pretty familiar with Excels and so on and so forth, right? You guys would have probably built a lot of different Excels for the use of your 9 to 5 work. That would have benefited your work a lot, right? Not directly benefiting you, but your company, right? So if you can work on something, if you can build an Excel that benefits your company more than you, then what's actually stopping you to spend a few hours to do the bare minimum to build an Excel, a trading journal that is eventually going to benefit you, right? So just think about it, right? You already know how to do this. Even if you're someone who is not familiar with an Excel, you don't know how to build that. Today, we have ChatGPT. All you need to know I mean, all you need to do is to ask the right questions to ChatGPT, and it's eventually going to build this for you. Like for me myself, there's a lot of formulations inside over here that I literally asked ChatGPT to build it for me, and it did it for free. So this can be done, right? So putting that aside, now let's go through this trading journal. Okay, so first of all, I built this trading journal to be able to track up to 1,000 trades, because I believe the more data you have, the more accurate the results are going to be. So every single trade that you're going to take is pretty much data for you, right? So first, when you open up a trade, you want to track the entry date and time and the exit date and time. So that will be your column B over here, your entry date and time, and your column R, exit date and time. Why? Because you want to understand for each trade that you're taking, what is the duration, what is the trade duration that you're taking. That is your column S over there, right? So you need to understand how long are you holding a trade until it goes to a win or a lose, or your break even, right? But this gives you an idea how long are you holding the trade. Next, you want to be recording the currency pairs or whatever that you are trading, right? It could be anything. Over here now we're talking about Forex market, hence the pairs that I have listed over here is the Forex currency pairs. It could be the stock market, it could be cryptocurrency, it could be whatever. But you want to list down the pairs that you're trading. Next would be the sessions, right? So basically we have three different sessions. We have the New York session, we have the London session, and we have the Asia session. You want to be able to track which session are you opening the trades, because eventually as you build the data, at the end it will give you an understanding where your majority of your profits are. In which session are you more profitable? Is it in the London session? Is it in the New York session? Or is it in the Asia session? Which session are you losing more? So you see, when you try to build this from scratch, and eventually over time as you update the data that you have, this is what's going to respond back to you and saying that, hey, you know, in London session you make the most money, but in Asia session you lose the most money. And that, my friends, that's where little by little you start seeing where you're making the mistake and where you're more profitable and you need to focus more. So this is what we're trying to do. All right, I'll just keep going first. So now you have the pair, you have the session. Next, you want to know the direction, whether you're buying or selling, right? And then the confluence step. Now this, you can have it, you cannot have it, I leave it to you. For me, this confluence percentage is pretty much a strategy that I use, and how much of the strategy is in confluence with my particular trade, right? So let's say, for example, your strategy revolves you using EMA, and let's say your candlestick is bouncing against the EMA, and that's your confluence, and you say, okay, I'm going to give you 10 points for that. And let's say your candlestick is creating an engulfing candlestick, okay, another 10 points for that. Let's say the sell structure is now turning into a buy structure, okay, that's another 10%. So overall I have 30% confluence that my trade is going to go in this direction, something like that. So this we will talk in detail later on, but this particular column is where I'm tracking the amount of confluence that I have based on my strategy, that is saying that the odds of this trading going, this particular trade going in my direction is more, positive towards my side, if that makes sense to you. Don't worry, I'll go in detail in the upcoming videos. We'll just keep going first with the trading journal. So okay, so next point will be the entry price. So for example, USD CHF pair, where do you enter, and then where do you place your stop loss, and then where do you place your take profit? All right, and when the trade actually plays out, whether you hit your stop loss or whether you hit your take profit, what was the actual exit price? What is the lot size that you have calculated? In the future videos, we will actually learn how to calculate the lot sizes accurately as well. But this is also an important thing that you need to track. What are the common lot sizes that you're using as well, right? How much are you risking per trade? All right, and how much is the potential reward per trade? As you can see over here, it's 12.5 for the risk and 25 for the reward. So that's a 1 to 2, right? Risk to reward. That's why in the column Q you will see the risk to reward is 1 to 2, right? And then when you actually close the trade, were you in profit or were you in losses, right? So as you can see here, these first 3 trades, they were actually in losses, and this can happen, right? You can have 3 losses, you can have like 5 wins, you can even have 10 losses. That is what we call as the winning streak and the losing streak, right? So right now, to be very transparent over here, these are 3 trades that I placed over the weekends, over this week, and all 3 was a loss. So the losing streak over here is 3. I've been having 3 back-to-back losses, right? So this also talks to you, this also speaks to you, whether the week is good, whether there is something that you need to modify. And same goes, if all 3 was profits, you'll have 3 winning streak, right? So that will also give you some sort of idea, what are you doing right, what you should keep doing, and what you don't need to modify. And if you are having losses, what do you need to do to modify? These are the important things that you get to learn from a trading journal. Okay, and then once you have already recorded this, the most important thing over here will be the notes, right? So if I go in detail for these notes, you need to track your emotion, right? How were you when you're actually taking the trade? Were you calm? Were you anxious? Were you having a fear of missing out the trade, therefore you jumped the gun? This kind of stuff, your emotion, right? Next, the trade reason. What was the reason you took the particular trade? So you can, like explain, I saw this, and this, therefore I'm entering the trade, all right? And then this is also important. You need to know what can go wrong, right? Like I said, trading, all right, when it comes to trades, every single trade is pretty much 50-50, right? The odds of you winning and losing is pretty much 50-50. It's like a toss of a coin, right? It's either a head or a tail. You wouldn't know, right? Probability. So one thing that is important over here to note is you're trying to build an edge that is highlighting to you, high chances this trade is going to go in my direction. But you need to also know what are the things that can make the trade not go in your direction. So by identifying this, you're actually looking at the trade in a very neutral perspective, right? So you need to highlight what can go wrong as well. And finally, once you have opened the trade, when you close the trade, you need to also update the results of the trade as well, right? So this is important because this is where you actually learn what was the mistake and eventually what you need to correct in order to not repeat the same mistake in the future trades, all right? So next, we have the equity, right? So for this particular trading journal, we are starting with $2,500. When you do your trading journal, you want to know how much money you deposited and what is the current balance after each trade, right? This is important. The equity is important because over time, all right, this gives you an idea whether are you actually growing your account or are you actually, going down in terms of your equity. And over here in the third tab, we have something called an equity tab, right? This helps you to identify how your trading is going so far. So this is just 3 trades, right? But we're talking about over 100 trades, over 200 trades. How does your trading balance looks like? And over time, you may also add on more money inside. You may also deposit some money inside. So this curve is very, very important. You can't see much right now, but over the next 100, 200, 300, 500 trades, this is gonna give you a lot of data as well. So you wanna track your equity curve as well. Now, maybe this is too much to absorb immediately right now, but as we go along in the upcoming videos, in the upcoming weeks and all, as we keep updating this journal together, all right, it will also, keep me accountable on journaling my trades, and it will also give you guys an idea on how to actually properly journal your trades. Now, I'll just show you one example, right? Let's look at the last trade that we just took over here for the NZD CAD pair, right? We sold this NZD CAD pair on the New York session. It had a very good confluence, all right? So if I go to my trading view chart over here, NZD CAD, so this was the pair, right? So this is the pair, and when we opened the trade over here, the expectation was to have a sell for this trade. And as you can see, this trade actually went down. It was actually doing good. We did not close this trade because we were expecting the trade to keep going down. But unfortunately, the trade did reverse over here and it had a shift of structure eventually and it moved to the upper direction. Now, how did this trading journal help me in this third trade? Is by realizing the last two trades, all right, the last two trades, if you can see that when the market shifted its structure from sell to buy, it went straight to my stop loss. So I was losing the entire amount that I was pretty much risking, plus minus a bit more or less, right? I was losing the entire amount that I was risking. So what I did differently over here is that I noticed that this particular trade has already shifted the structure. Notice this particular candle over here, all right? So when this particular candle over here, all right, when it started breaking above this round psychological number of 0.80000 over here, that's a clear indication that the market has already shifted to a buy from a sell, clearly to a buy, and it's going to eventually rally up. So the one thing that I did differently is I didn't risk my entire stop loss amount, right? I decided, you know what, because the market has shifted, now the probability has also shifted, high chances, all right, the market is going to go and hit my stop loss. Might as well I protect my capital. So I closed out at 0.80116, which is like about 30% of the total amount that I was willing to risk. Was that a good move? Yeah, definitely, because what you see happened thereafter, the market continued to rally all the way up. So I would have definitely hit my stop loss, right? But I managed to save 70% of my capital by understanding that the previous two trades that I took, when the moment the market shifted its structure from sell to buy, right, it hits my stop loss directly. So that way I saved up the 70% of my capital over here that I can use to deploy in the next upcoming trade. Now, can the market actually reverse back again from here and go and hit my take profit? Probably. But once again, like I said, trading is all about probability. And we got to be able to analyze and understand where the market is at that point of time and what is the probability of certain thing happening. At this point of time, I understood that the market has already shifted and the probability of it hitting my stop loss is way higher than the probability of it hitting my take profit, and therefore it is no longer valid for me to hold this trade, and therefore I would like to close and minimize my losses. And that's exactly what I did over here. And yeah, it turned out to be a good thing. So that's why you can see over here the results I mentioned over here. 30 minutes shift of structure brought back to break even, right? The trade came back to break even. At that point of time, I was monitoring and I decided to close the trade earlier at 0.80116 when the round psychological number broken as well. Okay, this was broken as well. And strong bullish candle was formed. So to save capital, I did this. It was a good decision. And the market continued to hit SL. So I know that, hey, I did a good job over here. Now, when it comes to trading, it doesn't matter whether you win or you lose. I mean, of course, obviously it matters, but you don't take a loss purely as a loss. You take the loss as lessons learned. What can you do better learning from this loss in this upcoming trade? And that is what this trading journal is all about. Now, I would like to conclude over here this particular video. There are other tabs that I will explain as well, but for now, so that it's not too overwhelming, this is what you need to do. If you're someone who's new, you're starting to trade from scratch, or if you're someone who has been trading for quite some time, but you do not have a trading journal, you've been making money, you've been losing money, you don't know whether net you're break even or you're on losses or you're in profits, you want to trade, you want to track your trades. You want to build a trading journal. You can take a screenshot, you can try to build the exact same as well. You can reach out to ChatGPT, it will help out with you for a trading journal. But this is our lesson one. This is what we want to do first. All right, guys, thank you so much for your time. I'll see you guys in the next video.